Yo, what up? It's the Cosmic here, and today I am going to go over the death of retail, bank off of bankruptcies. And there's no doubt whenever I say that this current market is absolutely crazy. We're experiencing volatility like we've never experienced before, and it's causing these stocks to react in unprecedented ways. So today I want to talk about the recent retail bankruptcy plays. In particular, we're going to talk about JCPenney, HTZ, and TUES. To fully grasp what it means for a company to file bankruptcy, you must first understand the two main types of corporate bankruptcies. There is Chapter 7 and Chapter 11. Chapter 7 simply liquidates the company's assets, and under the Chapter 7 of the US Bankruptcy Code, the company stops all operations and goes completely out of business. A trustee is appointed to liquidate or sell the company's assets, and the money is used to pay off debt. While Chapter 11 bankruptcy, the company doesn't necessarily go out of business, but instead is allowed to reorganize. A company filing Chapter 11 hopes to return to normal business operations and sound financial health in the future. This type of bankruptcy genuinely filed with corporations that need some time to restructure debt that has become a little bit unmanageable. First, let's take a look at JCP or JCPenney. At the beginning of the year, you see that there was a huge crash, and most retailers, actually the whole market, crashed at the beginning of the year due to the coronavirus. On May 15th, however, JCPenney filed for Chapter 11 bankruptcy, and it spiked into the 30s that day and ended up closing green. So it started in the 18-cent range and closed in the 30s. On May 18th, they actually were delisted from the NYSE, and it cracked all the way down to 10 cents. Well, this arrow right here is another date that kind of got interest because they had a little bit of volatility, a nice 50% jump, based off them reopening 150 additional stores across the US whenever the restrictions over the coronavirus lockdown were getting lifted. And right here, June 4th is one of the most interesting days in my eyes because JCPenney's provided an update on their store optimization strategy, essentially stating which stores are going to shut down, how many stores are going to shut down, and what their plans are in continuing business as they get to reopen after the shutdown. And this was a day that this stock just went nova. It went from 18 cents all the way up to the 68-cent range, and that's a crazy jump for a stock that filed for bankruptcy. They got delisted. You wouldn't expect a stock to jump up here and actually hold up here in its highs from the time that it was actually delisted and went bankrupt. So that's just very interesting to say the least. Next, let's look at HTZ. HTZ took a massive hit here in February as well whenever the coronavirus really started to take a hold of America, and they just continued to crack. And this first arrow is the May 22nd when they actually announced that they were filing for Chapter 11 bankruptcy. And this stock did what you would expect for any company to file for bankruptcy. It went from $3 to almost 50 cents, 40 cents, 30 cents, way down here. And it started to run with JCPenney from this 80-cent range all the way up to $6. Like, that is a huge run for a stock that essentially just went bankrupt. And they were also filing some trying to file some shady offerings that got looked at by the NASDAQ and the SEC, and they decided to shut that down. So they ended up filing that offering, but for the stock to jump almost 1,000% is just absolutely insane. Now, let's look at TUES, Tuesday morning. They are a little bit more interesting and a little bit more of what I expected to see with the bankruptcy play. They were hit pretty hard with the coronavirus, like most retailers, and we see the same downtrending chart. And on the 26th of March, they actually announced that they're going to be closing stores due to COVID. And then on May 8th, they actually got delisted and ended up filing for Chapter 11 bankruptcy on May 27th. And the stock went from 18 cents to 40 cents the next day, which is crazy. Filing for bankruptcies, you see that all these stocks essentially jumped afterwards, except for Hertz. They actually went down whenever they filed for bankruptcy that day, and they ended up jumping in sympathy with JCP. And the same thing happened here. There was a little bit of a sympathy run with Tuesday morning, going from about 17 cents to 28 cents. It's not a huge run, but it still had a nice little gap up the day that JCP was running as well. In conclusion, there's no doubt that what we're seeing is interesting to say the least. These Chapter 11 bankruptcy plays are now a hot sector in this market environment, and it's my speculation that it's caused by two main factors. With the virus shutting things down, it's only a matter of time for retail to start opening back up, and with these companies filing Chapter 11, it's less of a we're going out of business and more we are restructuring to weather the virus shutdowns. So I'm more inclined to be optimistic for bigger retailers like JCP and HTZ. To the influx of new traders that this virus has caused is allowed for the market to see way more volatility than we've seen before. And especially since these stocks are big companies that are lower priced, they tend to attract newer traders. So overall, I will keep an eye out for all these bankruptcies. Any new companies filing Chapter 11, I'm definitely going to keep my scanners on it, because they will be potential runners, as we can see with just these three so far. Anyways, fam, thank you so much. Y'all have a good one. Peace.
Are you tired of getting in hot moving stocks late? Does your current breaking news software break your bank? Getting fed up with poor software performance? Well, ditch what you have now for Benzinga Pro, the fastest and most reliable breaking news source on the web. With a fully customizable workstation and on-time push notifications to your desktop, you will never be late again catching that hot stock. Benzinga Pro beats its competitions hands down in both performance and customer support. Click on the link in the description and use code MADAZ25 for 25% off Benzinga Pro for life. Want to test it out before you buy? No worries. You can try Benzinga Pro 2 weeks free with no obligations. No credit card information needed, just an email address and your phone number. Sign up today and make more money.